What's going on, guys? So the topic of today's video is going to be GNC's 2018 earnings report. Going to be giving you guys a recap, going through all of the information that you guys need to know if you are in the nutritional supplement or functional CPG space. But before I get into that, I want to give a special shout out to Ryan. He's actually one of the GNC franchise owners. Owns a few locations in Mississippi and Louisiana. He reached out to me a few months ago, and we started a friendship after that. And he actually sent me this shirt here, pretty clever, sipping on gin and juice. For my older millennial folks that are hip-hop fans, you guys obviously know it's homage to Snoop Dogg. But he also sent me some of their new private label energy drinks and just kind of wanted to see my thoughts on everything based around me covering those categories. And what I think is most important here and why I'm bringing this up, or at least, why I'm giving him a shout out other than I thank him for doing that, is that when I talk about billion-dollar retailers or any type of business, a lot of times I am talking in generalizations because I can't get into the details on a one-to-one basis. And when I'm talking about ad performance in franchise or corporate stores or anything, that doesn't mean that all corporate stores are bad or all franchise stores are bad. And this is a good example because Ryan, sent this at the good of his heart, out of his own pocket. I don't live in Louisiana or Mississippi. I live in Austin, Texas. So I'm not one of his customers, and he didn't need to send me anything, but he went out of his way to send these things as a brand ambassador for the GNC name, and just wanted to make sure that I got to try these things and I got to have a really good experience with GNC. So I wanted to thank Ryan, but I also wanted to just point out that if I say negative things, it does not mean that I'm talking negatively about all people within the organization. There's a lot of great people in the organization like Ryan that are going above and beyond, growing at an extremely high pace within the portfolio. And GNC, when they're doing all these moves, are trying to find more people like Ryan to foster them over, putting their energy, time, resources, all those types of things into declining stores and poor performing employees. But let's jump into this. If you guys watched my vitamin shot video from yesterday, I'm going to kind of follow the same outline. We're going to be talking about Q4 just so you guys can follow along with some of the other quarterly videos that I've done on my channel. I'm also going to be talking about it through just the whole 2018. And then finally, I'm going to be just talking about just some of the earnings call things and maybe how I perceive some of those to make sure you guys get some useful insights. Again, I believe that's the most exciting or most informational part of this video. And that'll be kind of at the end. So stick around, make sure you guys do that. So in Q4, GNC had $548 million in revenue. That was down 2.7% year over year. Again, if you guys are not familiar, nutritional supplements, sports nutrition, all those types of areas usually has a small seasonality to it. So Q4 is usually the slowest. People have long forgotten about their goal setting that they had at the beginning of the year for their health and fitness. They're just trying to get through the holidays. They're trying to get to the end of the year to kind of start fresh over the beginning. So a little bit of a down quarter, regardless of which side of stakeholder you are within that CPG category. I'm going to be looking at GNC's numbers from kind of the tale of two cities, how I always kind of describe it, the domestic side and then the international side. You guys will see, if you guys have not followed or watched one of these videos before, what I'm kind of talking about. It'll be pretty obvious as I go through this. Domestic revenue for Q4, they had $445 million, down 3.7% year over year. They had a reduction in same-store comps. If you guys remember, same-store comps is basically if a store location hasn't seen any significant facelift, or it hasn't opened in the last 12 months, that's usually a good comparison of what they call same-store comps. If something happened, if it was a new store, if it got some type of facelift, usually that's not considered within the same-store comps numbers. And that decreased about a fraction of 1%, 0.6% actually, so not entirely too bad comparable to some of the earlier quarters in the year. And that's from the corporate side. That's also including the GNC.com name. If you look at just the franchise location name, they actually saw a little bit worse performance, 1.3% down. A great thing that GNC currently kind of reports, just kind of through some ratios and things, is that they do kind of break out their online sales. This quarter, their online sales were $45.4 million. That's actually up $6.6 million year over year. And on a kind of a run rate perspective, they are getting close to bodybuilding.com in terms of revenue now. Bodybuilding.com, excluding Amazon and Walmart marketplace. Bodybuilding.com is still kind of the leading online specialty retailer in this space, and they had, I think it was about $225 million in revenue. So on a run rate perspective, GNC is actually closing that gap. In next year, if kind of the trends continue, they will overtake Bodybuilding.com as kind of the biggest online retailer, online specialty retailer in this space. Like I said, Amazon is far and away bigger than both of them combined. I think almost 5 times bigger than both of them combined. So if we're talking about just relative, you still are looking at Amazon as kind of the leader of this pack. Now with the international revenue, GNC had $51 million in Q4. You know, if you're just looking at a purely a ratio standpoint, obviously GNC's international revenue is much smaller than their domestic revenue, but if you look at from a growth perspective, they're actually up 12.1% year over year. So they're continuously seeing strong growth. And then another kind of area that GNC is part of their revenue is kind of their manufacturing, third party. And this again is kind of similar in size to international and the digital sales. This one had $51.6 million and it's actually down 6.1% year over year. So if we look at these numbers from a full year perspective, just so you guys can get a sense more on a longer period, GNC had $2.35 billion in revenue, was down 5.1% year over year. Their gross margins were 32.8% this year. That was actually down from 33.2% last year. So they're kind of going in the opposite direction that Vitamin Shoppe is going. They do have a higher gross margin than Vitamin Shoppe currently, and that's primarily due to their focus on private label, where they obviously have a much higher gross margin than some of their third-party sales. Throughout the year, domestic lost $68 million in revenue on a kind of a year-to-year basis. If you look at a complete look of same-store comps, they were down a fraction of a percent for the year, and the small increase in the digital sales was offset by same-store comps decrease of their franchise locations. On the same sense, we're talking about just from the Q4. If you look at the international revenue, they actually gained $13.6 million in revenue. So not totally able to offset the loss of revenue in the domestic side of the business, but obviously continues to grow. Obviously one of the very strong parts of GNC's business at this point. They do have strong gross margins. GNC, if you guys follow on any level, you guys know they are a struggling specialty retailer in the nutritional supplement space. They have been struggling for the last several years, and they have instituted some really aggressive plans that last quarter they kind of announced. And they've also kind of been moving some pieces around and seeing the new chessboard and seeing what pieces they have available to move. And let's kind of take a look at those so you guys can understand just kind of where GNC is now and maybe where they're looking at in 2019. Big area that they talked about was store optimization plan. They are planning to close around 10% of their portfolio. I think if you look at a 2018 comparable to 2017, just comprehensive store count, that's going all domestic, international, store within a store, all those different concepts. They are down 572 stores over the year. And I think they announced between 700 and 900 stores total, but they're trying to close those stores at the right time as kind of leases expire, so they don't have to take big hits on their financials. They probably have highlighted all of those stores. They know exactly what stores they're going to go after, but they have to kind of look at when those lease expirations go up and just look at a bunch of different metrics that are just outside of, these are the bottom performing stores and we need to close these things as quick as possible. They also announced last quarter on more of that cost savings plan, cost cutting plan, whatever you kind of want to call it. They're really attacking the sales general and administrative section. Honestly, you know, whatever they're looking at, it's all to free up cash flow to make sure that they pay off the debt. GNC has been very debt leveraged for a while. They have made extremely aggressive moves this year to clean some of that up, but they also need to make sure that they have a continuous amount of free cash flow to be able to pay that off without having to constantly go out and get creative out in the market with joint venture. And what I'm talking about with some of these joint ventures and their goal of paying down their debt is, one, talked about this a ton of different times in different videos and articles, the Harbin Pharmaceuticals transaction for $300 million, where they gave up a very large piece of GNC. This has been completed as of February, I believe, so they have gotten all of their tranches for the $300 million at this point. They've used that to pay down some of their debt. And then just announced in this earnings report was that they did another joint venture with International Vitamin Corporation, which is a very large contract manufacturer in the industry. They are doing a joint venture where, for a total of $176 million, IVC will eventually take over both of the facilities that GNC currently owns, their contract manufacturing. They will shift that over, and GNC will initially get $101 million, and IVC got 57% of that initial joint venture. Over the next couple of years, IVC will have the whole manufacturing, and they will pay GNC another $75 million for the rest of that. Throughout the next couple of years, they will share in the profits through the JV, depending on the ownership portions. And GNC's highlighting this as, one, they needed cash. They can't really sugarcoat that. They have to pay down debt. But they're saying that, a very large contract manufacturer like IVC will have a lot of benefits to them in terms of synergies with purchasing and procurement, also just the ability to maybe do things a little bit better and quicker than GNC can with their own facilities, which is something that Vitamin Shoppe as well did. They kind of offloaded their Nutriforce contract manufacturing and I think went over to Arizona Nutritional Supplements. So this is the moves that are kind of happening now to create more of an agile organization, not being as integrated vertically as some of these retailers have been in the past. I could see both this being a positive and a negative in some senses, but kind of have to trust GNC on its word at this point in terms of they think this is the best deal that they could get at this point. I would just kind of caution the Harbin Pharmaceutical, the IVC transaction. These are, moves from an organization that, doesn't have a lot of moves left on the chessboard, so they don't necessarily have the most amount of leverage in these deals. So they could have obviously gotten much better deals for these joint ventures or more availability in financing if they were in a much stronger position, but they're not, so they have to kind of make the moves that are available. And if you look at just their ability to pay off debt throughout the year, I think they went from $1.1 or $1.2 billion in debt down to about $890 million in debt, so they were able to pay off a significant amount of debt. Now, more on the conference call and just kind of a commentary, if you guys watched my video yesterday on the Vitamin Shoppe, I really commended their CEO, Sharon Leet, in terms of just how she seemed extremely confident, but also she understood the sheer importance of the situation they were in and just kind of the moves and how aggressive they needed to be and just their execution. It seemed a little bit different on the GNC conference call. The GNC conference call, quite honestly, is just a little bit drier overall. They just kind of seem like they're going through the motions and doing their thing. Both GNC and Vitamin Shoppe, honestly, I think the analysts that cover these big analysts that cover it, they ask these questions and they just kind of seem like they're going through the motion. I wish that GNC or Vitamin Shoppe would invite me on to have some questions on their earnings calls. Maybe, I don't know how we can get that done or how that's even possible because I've never really looked at the rules on that from an SEC standpoint, but if there is an availability to that, maybe you guys can create an uproar. Maybe I could create a campaign or somehow that you guys can get me on these conference calls. But Ken Martindale, CEO of GNC, surrounded this idea of just like distribution or getting outside of the four walls, the bricks and clicks that GNC's used to. They are talking highly about just the Amazon partnership. If you guys follow some of my other social media, you guys know I talk a lot about, or I've mentioned a lot about all of the Amazon R brands, private label brands. GNC actually has 2 of those that are exclusive to Amazon. They also sell all of their private labels and some of their other kind of third-party brands on Amazon. So they do a lot of business with Amazon at this point, and they believe that's going to be an area that they're going to continue to kind of focus on over the next couple of years, as one of every 2 consumer product searches start on Amazon. So the traffic is there. You kind of have to, in one way or another, present yourself on that marketplace in a way that's going to help enhance your brand recognition, your brand equity. Though over the year it was kind of not really the best performer, their wholesale division, I believe, is an area of opportunity. They just re-signed their agreement with Rite Aid, which to me is, I don't know, I'm not too hot on that idea. I just think Rite Aid's a name that's just going through transition at this point. I'm not sure if they're going to get the full benefit out of that unless they have a really good understanding of Rite Aid's plans going forward. They also have been selling a lot more in other kind of food, drug, mass convenience channels with their private labels, and they believe this is going to be another area for them to enhance their brand recognition, enhance their brand equity, get people into their ecosystem as they buy. Maybe they reorder through GNC.com, go to a store location because they like the private label that they bought at, maybe a Dick's Sporting Goods. They also talked about just like customer experience and then the loyalty program. I believe those are kind of big areas that GNC needs to continuously focus on. From the loyalty side, they're kind of highlighting that 17 million people have signed up for this My GNC Rewards program. That's kind of their free one. They also have about 1 million people in their Pro Access. That's their paid one. That's the one where they see the most value at. That's also where they get the most customer information at. But I think you're going to continuously see that GNC is going to be focusing on collecting customer data. That is the key to this new economy. Whoever owns the data wins. So GNC is going to be continuously focusing on that through their loyalty program. And then on the customer experience side, it's kind of this idea again of like frictionless retail experience, being everywhere to everyone at all times, making sure that people really don't have an excuse not to purchase with you. So GNC, is talking about doing the click and collect, that the Vitamin Shop has rolled out and really been incentivizing people to do. But they also talked about, just kind of a quick little nugget, one that I've been kind of talking about a lot with them, is that they can utilize these store locations in a way of creating like a micro shipping point. So a lot of retailers at this point are moving to that shift where you create a little of a halo around the locations, then with whatever's around there, that is, if they are in stock, if there's a product in stock and somebody puts that on their order, if it makes more sense, they ship it from that store instead of from their distribution centers. And this micro shipping point is something that they're talking about, purchase online, but ship from the store. From what they said, this is going to be rolled out both domestically and internationally throughout the year. So this is going to kind of help across the whole board for GNC. I'm kind of excited to see how this rolls out because this is something I've been talking about for quite a few years now for GNC. So hopefully this rolls out. Their execution is correct on this because I think it's going to create a ton of value. They have a ton of stores in a lot of different metro areas across the country and across the world. So it's just going to be beneficial to them if they could wrap their heads around the tech under the hood to make this happen. They also kind of just highlighted a little bit of their growth of private label. I think some of the private labels they've been coming out with lately have been really good comparable to some of the earlier stuff. The Beyond Raw brand is really great. I think they're doing like an Earth Genius, Slim Vance, a couple other ones. I mean, overall, GNC's strength is private labels. For whatever reason, they are pretty good at building private labels for the retail set. They have to kind of continuously do that. I think at this point, 54% of the revenue is from private label. That is a huge amount, honestly. That always shocks me when I see that, even though I read it all the time, that it's somewhere around 50%, but it's finally kind of got over the 50% hump. It's at 54%. This is GNC being able to control their own destiny. They could get to control their own margins in a better way. They get to control the customer experience throughout the whole way. This is Retail 101 in 2019. This is what you have to really do to create competitive advantages over other retailers, and GNC does this extremely well. And then last, one that I've constantly kind of harped on and said great things about, the Tale of Two Cities, this international side of things. GNC's been doing a great job at growing their international portfolio, not only in the established master distributor relationships that they already have in some different areas, but really focusing on some of these hyper-growth areas of India, of Asia, specifically China, the Harbin Pharmaceutical transaction actually created a JV for them on the digital side that really helps them get some e-commerce traction in China. And they saw a 30% growth in this last quarter from that JV. So this is something that GNC is seeing as a competitive advantage, going to continue to kind of focus on. This is where they see kind of their ability to dig out. They have a lot of brand equity, a lot of brand recognition overseas. But I think we'll end this video here, guys. Hopefully you guys got some value out of this video. If you guys do have any questions about anything that's in this video, make sure you guys do comment below, or all of my social media links are down below. You guys can add me and engage with me on other social medias. To help me out, all I ask is that you guys give me the thumbs up button. It's just right down below when you guys are watching this video. It doesn't cost you guys anything. All it takes is a few seconds to click that thumbs up button. It helps YouTube understand that you guys got value out of this video, helps me understand that you guys got some value out of this video. And as YouTube spreads this out to more people, I get to uphold my goals of this channel to add knowledge to as many people as possible. But just want to thank you guys one last time for spending some time with me on this topic. Hopefully I gave you guys some value in return for that time you gave me. I'll see you guys on the next video.